All right, welcome back. This is going to be an experiment. We have a new computer, some new technology, and I'm going to keep this video pretty basic. But let's see how we do here. So, precisealgorithmtrading.com, that's us, and it's Friday, January 26th, 2024. Um, let's see what the markets did today. So, we're going to start here like we usually do with our automated trading systems. This is the Dow futures contract, shows right there, and pretty much back and forth here lately. Got a nice push up, and then we've gone mostly on this looks like a little mini downtrend. So we flip over here and we look at the 26th, and we had a few trades today. Oh, look at that. Most of them are negative. Um, One decent positive trade there, but is what it is. You can see what the picture did there. This is what it looks like on a long-term basis. This is over a year's worth of data, and this is really it's a nice curve, equity curve. So this is the results of our trading. This isn't like it's not like a stock chart like we look at a lot of other things. So don't get confused. This is the Russell 2000, and it's also had a little bit of a pullback here lately. So the trades for today are these: one winner and two losers. And that is also, we're looking at the longer term chart there. So um, just to kind of capture all of it, we're not looking at this on a only quarterly basis. The NASDAQ here is probably our most active trading system, and we got a pullback today. So, although I think we might have got a push up first. We have to look at the individual trades, and here it is. Um, so we had a nice big winner there, and then followed by a couple losers, a decent little winner, a stop out, which is what that is, stop loss, if you can see that, and another short entry stop loss. So all in, not great, but not terrible. Looks to me like we're maybe back, like we're heading back up again. It'd be nice if we got one of these instead of this chop back and forth. But if you look at this on the all in, you can kind of see where we're at. We had one of these consolidation periods back here, and we've been in one of these for a while now. And again, this is from 10/25 of 2022 to 1/26 of 2024. So that's over a year's worth of data, and it's really a pretty good looking uptrend for our equity curve. You just have to wait these sideways periods out. All right, let's flip to Think or Swim. And I went ahead and just tried to simplify this. I got the colored bars on, I got the zigzag on, and I've got the 30 period moving average on, and I've got the 2 period average true range stop showing in the dashed lines there. And then the zigzag brings along these 50% levels that it automatically draws them in. And that's something I programmed so that I could get it to, so I could see, generally speaking, like when you get these big moves higher, where you can expect price to pull back to. Or if you get a big move lower, the same thing, because you can see here, like the last push lower came back up and stalled at that line right there. So, and then I only show them in the recent swings, but you can go back here in time and you can actually do the same thing. You could draw these in by manually, and you use the drawing tools up here to do it. There's lines and there's percentages, and there's a whole lot of tools here. You can Google how to use Thinkorswim. It's got a lot of functionality. So, anyways, let's focus on the line that turns from red to green. That's the 30 period moving average, and we've been literally above it this whole time. We got to pull back to it right here. A bounce, came pulled back to it again, came up We have not crashed below it even on the hourly chart yet. We did for a little bit here, but then we got reversed. So the market is still up, and really what this is telling you is that that's the trend. The green line, until it switches to red, which like it did here on the hourly chart, and then it went from a bullish trend to a bearish one, even though it was only lasted for whatever that was, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 bars, or maybe 17. So, well, we are, stay cautious here. It was a big push rally up, and then we've done this sideways chop, but it is like sideways to up. And you can see these lines. It's interesting that it's chopping around that upward line, even though it's above it. And so you got to keep that in mind. It's, we look at all these markets independently and then kind of think of them together as to, or what story are they telling us? We're in an uptrend. We've done a pullback here on the Russell, and we've pulled back up again. And in the terms of zigzags, if you go back here, you pull up, pull back, pull up, pull back. We've pulled up, and I'm expecting a pullback, and that actually would be probably healthy for the market, so they can get some consolidation and then possibly take the next leg higher. We have indications really on these oscillators down here of potential moves higher from here. But we're not in oversold territory. You can see when these things get underneath this zero line here and they get oversold, you have a better shot at going higher, even though you get some back and forth here, which is, I think, possibly what we're going to see here. So regardless, that's not, we could trade the IWM. That's the same as this RTY. It's just the instrument you use. It's the exchange traded fund, and you can see we got our buy signal. I'm going to not do that. This was our buy signal back here, where it was a green line up, and you got to close above. It crossed above, and then even after it did that, you can see it went sideways for a bit, because the market doesn't make anything easy on people. It went sideways to make you kind of question that whole move, and then it popped higher, and this green line would have traded or stayed green that whole way up. When it passed down through here, it turned red. The line turned red momentarily. We pulled back. This is where once it pulls back like that, or crosses back like that, you literally go one pivot back and two pivots, and this is where your pivot area would be for a stop. You could even pull it a little farther back, but as long as you set a hard stop, then it can get all this move all the way down into this zone. Now it's pulled back up again, and you get a new buy signal, and then you get a sell signal here, and now you can adjust your stop, because it would have been here or here, and you can say, well, now you got a new pivot, and you can go, that's pivot 1 back from this candle where it crossed under, and this is pivot 2. You can set your stop here, or again, you could keep it here for a little bit more, give it more room to breathe. But if you're positive in this whole trade up, and it pulled back like this, and then it comes up here like this, I would actually tighten my stop, just so I collect at least some of that whole move. And then you can actually move over here to the right hand chart. It's the hourly chart, and as soon as it starts crossing on the hourly here, you can't use the pivot of that day because it wouldn't have been there. That pivot doesn't show up until you have bars on both sides of it. It needs to have higher highs on both sides, and that's what creates a lower pivot. But anyways, so that pivot doesn't count. This one would, and so would this one. You could set your stop there to collect and keep your profit. Or again, if you're going to give it even more room, you can look at this ATR stop and you could pull it in somewhere where it's under that level. Or, even further, you can go ahead and pull your stop into this zone down here where you got 3, 4 pivots all showing up, and you could put it at that low, which happens to be that low right there. And you'd collect your keep, make sure that you're keeping all this gain up to at least that point. I hope that makes sense. So if we looked at an individual stock, let's look at Carvana. It's a pretty decent example where we've come up, we've pulled back, and we've come up again. And so we could literally set our stop off of this pivot and this series of pivots down here. Now these are options, so that it doesn't actually set it at the level. This is the level that I've got it set at, and it's just so happens to be that pivot right there. So we're giving it that room to breathe, but at the same time, I know this is the first pivot that the market will take out. So the market will literally go and find these close stops, and there's a reason for that. It's basically a lot of people wanting to protect their profits too close, and yeah, I can get into that in a whole different thing. But you can put zones above and below where supply and demand are, and you can actually see when it comes back into a demand zone. That, I mean, even right here, there's a gap right here that all of a sudden the price moved after that gap. So there's technically a demand zone down here, and there's going to be a bunch of orders placed right in this zone. So the chances of me getting stopped out at this point, I think, are pretty clear. It's possible. They're always possible, but at the same time, I stick to this pretty hard. And I've also got an alert right here to, if this thing gets below this pivot level, which I put it a few cents below the pivot for what it's worth, then I'll get the alert. I can evaluate it in these are hourly bars, so you can take some time and you can get to it, and you can evaluate that. And do you want to pull it up from where maybe your stop's down here? Maybe that gives you a chance to pull it up to this level and go ahead and stop yourself out. I'll show you a short position at the same time. So here we have a higher or a high, and then we have a lower high. And so when this came back up, literally yesterday, I looked for an opportunity to go ahead and short the thing. So I bought puts, which is a way to go short on the market, and go ahead and put the stop up here. That way, if it comes up through here, I can set alerts and I can do all sorts of things in this whole gap. But you can see it's already reversed and rolled down. Now, that's no surefire signal that this is going to like play out to the downside, but that is everything I want to see, because I set it up off this. Literally, we were red here, and this thing was pulling back up into it. So, and I could see the pivot and the lower pivot. I hope that makes sense. All right, let's keep going. And if you have questions, you can drop them in at precisealgorithmtrading at gmail.com. So the Dow here, it's the one that's really defying gravity, which, if you're long, it's great. It's actually helping prop the markets up. So, but it is certainly sideways, and you can see sideways to up right now. One of these days, I think this thing's going to roll over, and it might be just a rough day for everybody in the markets unless you're short. And we got the NASDAQ here. Looks like it was down fairly aggressively today, but it sure doesn't look like it's not very aggressive looking on a chart. You can see over here there's a lot of space down to the midline here of that previous move. So this thing could go pretty fast. We could literally go from this upper trend line or upper 2 ATR stop to the lower one, which these things tend to do, in just a few bars, probably, possibly. But right now, it's still all pretty bullish. All right, the transports. This is what they're doing. Same kind of story. Look like they're either consolidating or we need to have some back and forth chop here before we can really pick a direction. My direction is going to be higher from there. Oil. Let's look at oil because I think it's a really good lesson here. Been waiting for this pivot to get taken out, and you can see that happened yesterday. So our position that's been literally all this back and forth for what's been really weeks is finally taken off to the upside. And we can just monitor it off of this green line down here, and when it crosses the green line we can adjust our pivots, or we can go all the way over here. Since I'm already profitable, I could start to measure that, which is why I have this alert in here. If that crosses that green line, I can get an alert, cross it to the downside, and I can evaluate off of the hourly chart if I want to keep my profit and adjust my stops. I also have an alert up here that if the price gets up to that level, I want to know so I can take some profits before we hit all this resistance up here. Let's look at gold. And it's just a lot of back and forth, but generally trending like it wants to go lower. All right, that's enough of the markets. Let's go to stockcharts.com. Type in bullish and run through the bullish percent indexes. So the industrials are down 4.17%. They sure look like they're going to want to roll over here pretty soon. That is 80, 78, 76. We're 0.66% away from having a new column of O's here. So I think that's going to happen. The NYA has already rolled over to a column of O's, up 0.74% today. The transports didn't move, so that's interesting. The NASDAQ already rolled over to that same column of O's, and we went up 0.14% today. The S&P 500 in a column of O's and went down 0.29% today. Nothing really to write home about there. The OEX tacked on a new O to the downside, and we went down 1.41%. So the whole time that these markets are in these columns of O's like this, until you get a catalyst to shove it back the other way, which it takes 3 boxes to reverse, we're going to be fighting the basically the underlying bearish positions that are happening here. This is just more stocks. Like in the OEX, there's 100 stocks, and they're rolling over. More of them are tacking on bearish signals, bearish point and figure charts. So, and finally the NDX in a column of X's, minus 3.7%. This one needs to get to 82, 80, 78, and it's at 78 today. So, wait a minute. $80, 78, sorry, it's going to be 76 to roll over. And so we're 2 points away from that. All right, that's our weekend wrap up, and hope everybody has a great week, and I hope this video came off well. So until next time, take care.